The biggest drop in US allocation ever recorded. Goldman Sachs believes that systematic selling is almost over and key levels are reached. Hello, ladies and gentlemen, and welcome back to the Daily Show where we talk about stocks, commodities, and cryptos together. In today's video, we have a lot to discuss, including whether technology has done enough to show us a turnaround, what the dark pools are doing, and where the opportunities could be right now in markets. Are we about to see a silver squeeze coming on with a massive impact from tariffs that could be just around the corner? And more than that, what about the bonds market? Has it finally done with freaking out? Well, in today's video, we'll explore it all together. This one's not to be missed. We'll see you soon, guys. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, there's a lot to discuss. Tesla's downfall to the put zone, Nvidia entering the most traded zone and area, and of course, the latest macro key levels, and of course, indicators that you need to be watching. On top of all of this, we also have the FOMC press conference in less than 24 hours, which could, of course, break or make certain levels as we see Jerome Powell and the Federal Reserve potentially make some announcements. Now, what is the record that we don't really want to see broken if you're in US equities? Well, of course, one of those would be US equity allocations. The biggest sell-off in terms of we've ever seen in terms of equity allocations has just occurred. And you'll notice that money has been flowing into the Eurozone, the UK, and of course, emerging markets. Now, most importantly, I would say that we've seen China be the real exceptionalism, which we've got a chart on later on today's video. And we have been discussing them coming out of a recession and what this could mean for world markets. But the question then becomes, should we really be looking outside of the US, or is this more of the same of what we've seen before? Well, of course, there are many arguments both ways here, but if it's going to turn, generally this is the time. And of course, Goldman Sachs has just come out along with JP Morgan and said that they believe that the end of systematic selling is about here, at least based on statistical history. Now, why is this important? Well, it's about the point in time that we would generally see a turning point based on Trump tariff 1.0 and where we are right now, the end of March. And of course, this week is what we call big options expiration, quadruple witching, or the OPEX event. Now, all of these seem to time in very well with the Federal Reserve's big statement, but the key here from Goldman Sachs has to do with the overall upside potential. $45 billion of S&P needs to be bought versus the tape, and only $3 billion needs to be sold in downward tape. So this is now the largest 1 month forward demand we have seen since 2023, and this is as of the 13th of November 2023, which is actually the third largest 1 month forward demand ever seen since COVID. So basically, we have an exceptionally period of time where if a market rally is going to happen, it's due to just realistically money having to flow back into the system. So it makes us think, well, okay, what actually is wrong with the economy right now? Now, again, it's an argument that many people can make all different ways, but foreclosures are certainly starting to pick up. We've actually seen one of the worst reads in a while here on foreclosures, and it looks like this is jumping to the point that we haven't seen now since really before the 2020 pandemic. Why is this important? Well, it could be just a return back to the norm, but it also does show that there is stress and financial hardship within the industry. And actually, it goes much deeper than this. Maybe we'll do a video on it soon just to explain how many people are being let off on not making payments on certain houses and other things, and the government kind of picking up in their lieu. So this is a big issue that is actually upon us, and maybe it is not being discussed enough, and possibly that is with good reason. What about Magnificent 7 stocks? Are they oversold? Well, yes, you can see here some are down big time. Of course, Tesla down almost 50% at the time of this recording, and it's definitely copping the biggest brunt. But a lot of them are down pretty heavily. I mean, you're looking at Nvidia, Microsoft, Amazon, Alphabet, Google, some of these getting into a little bit better valuation ranges. And as you'll see with a chart that we'll show you later on when you're looking at Nvidia PEs, it's actually at a very, very important time. Now, do we see recessions? The question I always see in the chat, Tom, recession is coming tomorrow. It's going to be here in 2 weeks and all of those types of things. Traditionally, we usually don't see a recession when everybody thinks it's happening. And I would say that recession searches on Google and other platforms are absolutely skyrocketing. At the same point in time, I think it's really important to note here that at least with the latest data that we have from industrial production, it's at an all-time high, never seen before. Also, we've generally never gone into crashes with industrial, let's say, production on a massive tear. Now, you may say, but look at this, and then we went into a recession. It's not exactly what I would call a massive lead indicator, but it is a good sign that there is a huge industrial revolution happening at the moment with trillions of dollars being pumped into the system as we see de-globalization. I think the key here is de-globalization. This is going to be the story of our investment and trading journey throughout the next couple of years. What should we actually be looking for in the world of de-globalization? Could it be actually that rare earth minerals and metals are one of the most interesting points? We've been discussing this in our private community. If you're ever interested, links in the description down below and you can check us out there. Now let's talk about one of those important metals, which is silver. Have a look here at lease rate soars as tariff fears expose a tight market. Take a look at this. 1 month rates remain elevated amid drawdown in London's stockpile of silver. So basically, we are seeing a huge potential silver squeeze going on in our midst here. And the last time we saw that was back over here in the back end of 2022-23, and silver did actually ramp off that period. So is this a big deal? I would say yes, and it's part of the reason that we've been discussing silver. The price action confirms that there is something going on underneath the hood. And of course, silver is still playing catch up in terms of ratio to gold. And I think that's really important for us to note. Gold's been exceptional. We've been loving gold. I mentioned about a month ago, silver seems to be a little bit better than gold. And so far, it has been performing better. Now let's talk the stats though that matter for the stock market. The first one here is, okay, let's say Goldman Sachs is correct and the market is almost done with its heavy oversell. Yeah, that could bring a rally. And of course, we've already talked about the 5,500 level being an exceptionally good area for people to be looking at positions and potentially making other decisions. Obviously, you guys make your own choice. You know, that's how it is. Risk, 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 of course, aversion. Now, when you talk about 1 week, 2 week later from these big thrusts that we saw this week, remember here from Subaru Trade, we see a 90% plus like an 86% or something thrust indicator on stocks. This was taken as of the last 2 days, not the previous trade session we're on right now. And that usually means that we have a bit of a flaky market. So we have to expect that it could even make a new low. But in general, look at the 2 month later stat. 100% of the time with other reads, we've been bullish overall. And this is backed up with this particular read here from FinTwitBot, which basically shows that when we have these declines from the top of the markets, or a very quick decline, and then we have these two massive upward thrust advancing volumes, that markets will traditionally go back down to either test the lows or make a new low, but they ultimately will be bullish. Now, I think this is really important. This is a stat that you really need to be paying attention to. And you might say, well, what about this one over here? There was still a relief rally that ended up happening in there. But yeah, it's all about, you know, where are we? Are we at oversold? Do we see enough bullish signs here still in the overall market? And I would say the key here is that 6 of 6 times it ended up going down to the lows or made a new low. Now, that means a guarantee? No, but that is still a 100% read on the limited data we have. Very interesting, should be paid attention to. What about Nvidia and other markets? Well, you can see here, according to this Bloomberg particular image, it shows that Nvidia is at the best PE ratio blended on a 12-month scale that it has been in years. And when you tend to get down to this PE ratio around this point, you're starting to play with the best bouncers of the last couple of years. So if you know anything about Nvidia stock, you would know that last 6 to 9 months, this is basically its return. Nothing, yeah? So if you go from a nothing market and you actually start to see some recovery, then this, of course, is around the right zone. And it makes sense. It's at the most traded area as well. We also have the latest macro charts core risk model obviously being completely oversold. That makes sense. We've got some big inflows that happened last week, according to Bank of America clients. Again, maybe scare them out, spook them, make a new low before going up. It's possible. I don't think the low is looking too bad though, and we'll talk about that on the charts. And you can see here, equity put call ratios also kind of going with those good stats of the next 2 months. Very flaky over the next 2 weeks, there's no doubt. But when you start going out further than that, things actually still look pretty good. And do remember, deregulation and corporate tax cuts are still a big win for the markets, although there are still many, many concerns over other things that are going on underneath the hood. Remember, the economy and the stock market are different things, and you need to trade them or invest in them applicably for that. Now let's have a look at 3 standard deviations. That's how far away we are from the 50-day. You guys know traditionally we start to float back up to moving averages, and particularly we hit the 200-day moving average. I'm pretty confident we will reach that over the next month, and even potentially the next couple of days, depending on the Federal Reserve. There are a couple of reasons why fast sell-offs like this tend to be bought back up. You can see here the latest Fundstrat data shows 3-month, 6-month, and 12-month data is incredibly bullish. Again, those 2-3-month reads, 100%, 100%, 100%. There's not bad reads when you look at them. And of course, it then makes you question, should you be buying the US or should you be buying other markets? Well, we've already discussed the idea that the US market has been incredibly exceptional. I mean, you can see here the Chinese market versus the SPY. The Chinese market got smashed by the US market for years and years and years. But that has changed in recent months. And you might say, oh, it's based on the election. It's not based on that. It was already happening. You can see it here. It already has been occurring against every major market out there. So, of course, that remains still a very good liquid place for some people to be in. But the real question here is, will America go back to an all-time high? And that's to be determined, but the stats do show that there are some gains to be had. And of course, we're seeing a lot of dark pool shenanigans. Basically, Wall Street made a huge cluster sell over the past 24 hours. Since that point, guess what? We rallied down or we moved down, and guess where we went to? Yeah, that's right. We went exactly to the area where we saw that monster trade on the Qs just the other day. So we've got S&P and Qs back down to exactly where those huge trades were. And this is the 8th largest trade in the last couple of years. So again, you can see a very key level here for the S&P, and more importantly, why this is such an important level to hold. And you can see the cluster that's happened there as well. So many transactions happening through these bases. So it suggests to me that systematic selling may be pretty close to over. Could we get another low? Yes, some key levels to look at on the S&P 500 will be 4475 and 4400. These two levels would be probably the worst that I would expect for now, and without a relief rally. And the 200-day, which you'll see in a moment, is going to be the key to look at in terms of the upside. What about the crypto world? Has that improved? Take a look at the inflows back into Bitcoin. Wow, big ones. 244 mil coming in. That now takes us down to a 7-day outflow of only 215. So that's a huge, huge, huge slowdown in the bleed that we've got on the Bitcoin kind of traders, and that's a good sign as well for risk back on. Last 24 hours, when we take a look, XLY, the American consumer was the worst. Semiconductors sold, technology sold. So it was clearly risk off. There's no doubt that this is a risk off day. Gold continues to do well, and of course metals and energy playing a little sneaky thing there. So they've started to pick back up as potential of worrying, I think, about tariffs begins this idea of reinflation. Gold is now the best on the last 5 days. Semiconductors is still the second best. So just remember, semiconductors is still not as bad as you would expect considering what's gone on. And that's because he did see a recovery, and we have seen a lot of semis holding off their bases. That is a good first sign that we're putting in temp lows here. And even if the S&P goes to a lower low, that if Nvidia and other semis stay above their lows, that is a good sign that there is an inherent tape buy strength there. S&P 500 pulled back a little. You can see it here on the charts. Let's have a look at it based on the futures market. We've got an anchored VWAP sitting here, so that's acting as support. The 5600 put level that we spoke about in the previous video. And of course, we've got here the options highs and lows. And if you look at our previous video, you'll notice the options low was exactly on this level. So if you bought here, I think that's pretty smart. That was not too bad at all, especially for the end of the close into the next session. Hopefully it works out for you. And of course, we currently at a change of trend on terms of TA. So the technical analysis has improved. This is the first time in the entire sell-off that we can actually say, man, maybe there is a base actually forming here. And I think that's important because, of course, most people are going to be angling in for this area, which is now sitting at 5760, which is where the 20 exponential moving average and the 200 simple moving average sit. So that's going to be that dynamic resistance that will become all important to figuring out whether the US market is ready to go to a new all-time high. Let's now take a look at the charts. 5600 remaining the big put of the next 24 hours. That's where the FOMC is going to come out. 55, kind of 30-ish area, interesting zone here. as well. And of course, you can see that there is a smattering of put ratios, but the one I'm interested in is most likely the 21st, which is 5,500, 5,600, 57. Look, if I was a market maker, I know that we're still in massive negative gamma, but if I was a market maker, I'd try to push it above 57. Hey, that's not exactly, wow, it's going to happen, but I could see it happening. And of course, with price action improvement, that's where the daily 200 is. Let's see what Jerome can get done on this market. Will he bring out those old statements of, we're going to use all the tools, guys, don't worry, we've got this, we've start QE, it's all fantastic. And we'll see what they do make announcements of in that press conference. And the press conference, by the way, is 2:30 p.m., and that is New York time. What about the other stocks, things like Tesla? It got absolutely crushed, as we saw, of course, more and more people boycotting the stock. A lot of anger in this one. Realistically, I think you want to get rid of your bias either way. And instead, what you want to be doing is there will be opportunities on Tesla if you're going to want to trade it or invest in it or whatever. The reason is because it's a very polarizing stock. So at the moment, 200 and 220 is kind of where the buyers will sit. And if the market gives up 200, then it's going to get nasty, nasty, nasty. Yeah. So that's pretty much where the buyers sit at now. And we're back down to that kind of potential buy zone for it. Let's move over to Nvidia. Nvidia 115, most traded zone. And yeah, we're just between 110 and 125. I mean, that's pretty much it. 125 plus, positive gamma. At the moment, still negative gamma. Still basically with bears semi in the control. Remember, Nvidia did change trend towards the upside. So it is still holding a pretty nice bullish kind of bias here at this point in terms of structure. Now let's go over and say one exciting piece of news for the bulls is that we finally saw a little bit of a slowdown here in bonds freaking out in terms of option spread. That is a key. We've seen this before. Now, it doesn't mean that the S&P's made its lowest low. That can still happen. But usually the lowest low is not very bad if it does occur after this. So this is a huge turning point. I would see it as a confidence level in the markets. And again, just one of the reasons that we do look at these things. US yields, of course, definitely still a concern. You can see here 10-year, 2-year, still holding up high. So that's something we'll have to pay attention to. And of course, home builders continuing to weaken here, which will be an investment nightmare if that keeps going bad in the future. US dollar dropping off. Obviously, it is oversold, but that doesn't really matter. At the moment, we're looking at still weakness for this year. And even if we get recoveries, I would say that it's being kind of engineered down. So I think the dollar is going to weaken throughout the year. And this is pushing things like our gold trade or investment up. So that's going through 3,000 at the moment, which is pretty strong. Looks pretty good on the charts. And of course, some other things as well. Take a look at these metals. Copper, a few other metals we've looked at in our private community. Again, links in the description if you're interested in that. These metals are absolutely going ham. Now, I have a few reasons why this is occurring, but yeah, you can see here, we're about to get a new high in copper, and that is a huge, huge, huge position. At the same time, silver continues to make higher highs. You can see it here on the daily, just kind of like, moving above. To me, this is signaling that it's going to continue up. We could be looking at like a 34.80 pretty quickly here in terms of silver per ounce. And this is again, a very strong sign. So I think at the moment, silver looks really strong and a lot of metals look pretty good. Now, we mentioned Tesla on the charts. You guys can see it. 220, 200. That's where the puts are. That's where I'd expect some form of buy read if it's going to happen. And at the moment, the trend is still down. 250 is, of course, the call wall. So that's the resistance. So basically, you're stuck in a range. And I wouldn't mind if it ranged for a while. That will give us probably a great trade on it itself. What about the rest of the markets? Intel, absolutely flying high. It keeps getting a lot of speculation. It's going to be a bit of a winner of, I guess, say government formed, industrial production and stuff coming back to the US. So Intel's, of course, getting that win. And we've also seen AMD forming base structure as well and kind of gapping up and out. So that's pretty strong stuff going on there from some of these semis. When you look at the mags, it looks horrible on the chart, but again, it's holding into that zone. No higher high was made this week, so I'll be watching this very closely. Again, volume, we need to look at this together. Volume is still quite consistent down there. And China, strength to strength to strength, as more liquidity is pumped into the system, and basically they keep that kind of the central bank theme going on. US 2K, nothing to really report here. No breakouts yet. We'll update when that changes. And NASDAQ, coming back down to, as we know, the big trade that happened over here. and it's just testing that level right now. If we do get a lower low and then rally back up, that is going to be so strong. We're going to really like that, actually. I know a lot of you won't, but if we do get that, that'll be really strong. And a lot of decisions are going to be made here based on potentially the FOMC meeting. What about Ethereum? 2000, that's going to be the key level, again, ahead of the FOMC. And if you look at Bitcoin, what's it doing? Slowly coiling down into the announcement. We have seen some uptick in purchases, but again, that 84.5. If we start going lower, you guys know 73 and 68K become the levels for the crypto market. And if Bitcoin manages to rally, then we can go back to 100K. So very important point, all about what Jerome Powell and possibly just what the market does to activate off this news. It may not be the news itself, it's just the activation. So why do we talk about this so much? Well, we have, of course, an interest rate decision, probably no change, economic projections, statement, and press conference. And really, it's this one that probably is the matter. So 2:30 p.m. New York time, guys, you're going to have to be watching that. Now, we will have a full breakdown of that particular event and obviously talk about what we think after it. So make sure to subscribe if you're interested in that type of content. Also, guys, in regards to whether there are opportunities out there, there always are. There are often other markets outside of the US or, of course, commodities that we do cover. So we still like some of those, and some of those are looking totally different to the rest of the market. But ultimately, you're looking for, of course, those gamma stocks to start to find a bid. And we have seen that in quantum. Beta stocks there. So will we find other things actually, improving? Well, we'll be watching over the next couple of weeks and days. And of course, make sure to subscribe if you're interested in that. Follow us on LinkedIn, follow us on X, and of course, check out our 7-day flash sale if you're interested in our courses or anything else. Thanks so much, guys. We'll see you in the next one. It's going to be interesting 24 hours. I'm looking for some big breaks. Let's hope these data stats start to hold. Bye for now.